Welcome to the Happy Cows Eat Smart podcast, brought to you by Novus AgriScience, where your dairy's business success is our passion. In our monthly podcast, we cover updates and insights within Federal Milk Order 33. Our team of expert ruminant nutritionists delivers research-backed, custom feed solutions tailored to your herd, because we know every farm is unique and no two solutions should ever be the same. We go beyond nutrition. Through robust tracking of herd metrics and financial benchmarking, we help you optimize costs, boost performance, and build profitability so you can focus on what matters: happy cows and a thriving business. So whether you're tuning in from your office or your truck, join us each month for insights, stories, and strategies that promote herd health, farm performance, and dairy success. Let's make your business thrive, one episode at a time. And now, Dr. Lawrence Jones will share his insights for Federal Milk Marketing Order 33.
Thank you, Ben. And I'm going to go ahead and get started with a couple things that are kind of nagging me about this market here. And will apologize, my voice a little hoarse. I've got a bit of a cold here. But anyway, we've got a significant increase in Class 4 prices compared to Class 3. So what does that actually mean? Well, first off, remember that Class 1 is the higher of 3 and 4. So now all of a sudden, Class 1 is going to be this higher number as opposed to the average of. And Class 2 is also equal to Class 4. Now, there's a little bit of a difference there, but they move 1-to-1. So if all the Class 1 is based on Class 4, we can actually start calculating what the percentage milk is going to be affected by each of these. And it's going to be the majority of Class 4, so about 57%. So even though Class 3 may be significantly low, milk prices are going to remain high because of that higher value. And the question is, what signal is this sending to the dairy industry when you sit here and look at this? And I think it's pretty simple. Produce more milk. So I ask the question is, what's driving this high Class 4 price? Well, it's clearly non-fat dry milk. And what we've got here is the global dairy trade relative to skim milk powder, as it's based on non-fat dry milk, and the spot market. And traditionally, non-fat dry milk runs about a 20-cent discount to global dairy trade. Starting back here in the first of the year, the spot market has just gone rocket up here. And right now we're at about $2.20 on non-fat dry milk. The question, of course, is will the National Dairy Sales Report follow that up quite that far? And I suspect it won't follow it all the way to the top, but it will continue to go up here. Now, one of my arguments is we should have seen this coming clear back in February of 2024. We'd been on this significant uptrend of production of non-fat dry milk on a daily basis. It fell off, and now we're continuing to go back up, but again, much lower than that trend line. So I started just doing a little bit of calculations. I said, what does 1 pound of non-fat dry milk represent in fluid milk? And it's about 10 pounds. Again, there's about 5.8 pounds of other solids, 3.4 pounds of protein per 100 pounds. So let's call that, 9.5. Round that up to 10. So that says if we're going to produce around 6 million pounds a day, let's pick an average number in here, that needs 60 million pounds of milk per day. That's only 9% of our milk supply. So non-fat dry milk is really a stepchild as it relates to where milk is going. Then I wanted to kind of calculate how short are we. So I picked this number back here in 2022, which we did 6.1 million pounds a day. February we did 5.7, so we're off about 500,000 pounds of non-fat dry milk. So the question partly is, where's that milk going if it's not going into non-fat dry milk? So there are two ways to look at this. One is this might be going into skim and not actually making it into non-fat dry milk. But the question that I want to ask is, if we need to build this non-fat dry milk number, are we going to cannibalize the milk that's in cheese? So let's look at our cheese production. Significantly higher, 41.4 million pounds a day. We just simply use that February number and say we've got to make up enough milk to take away about 500,000 pounds. And again, cheese is also a 10-to-1 ratio, or 1 pound of cheese per 10 pounds of milk. If we do that, we still have entirely too much cheese. And again, this is the February cheese production. This was a record high amount, not only for February, but record high anytime. The moral of this story is, if we need to increase non-fat dry milk, it will not cause a shortage of cheese. One of the graphs I really like to look at each month is our rolling disappearance. And again, this is like a rolling herd average. We were very flat here, then we went up, and all of this here is due to exports. And if we look at the 12-month rolling disappearance, it's about 40.4 million pounds a day. In February, we made 41.4. So again, we've got over 1 million pounds of excess cheese compared to our rolling disappearance. This says we need a 9.5 million cows. We're going to be pushing 9.6, 9.65, entirely too large of a herd. But again, the moral of this story is, if we do anything to impact exports, then our cheese price is going to come tumbling down. So let's look at these cow numbers. Our latest slaughter data is for March 29th. There was 50,358 animals culled, 4,000 more than a year ago, but we've got 181,000 more cows. So again, a much larger herd. It was a year ago when we started dropping these cull rates down to 25% that we actually grew this herd from 9.5 up to 9.6. We're doing the same thing right here. This is this February, that is last February. The question that I've been asking some people is, what if we hit 9.7 million cows? What's that going to look like? We're going to get the milk production report here on Wednesday. So here's my prediction for milk production. And I'm putting my predictions out now with the variance associated with it. So what I'm saying is we should be on the high side up about 3.4% year over year, on the low side around 2%. But my actual prediction is 20,456,000,000. If we put that in and actually try to make all this work together, it looks like we're going to add around 20,000 cows. So in March, we could print 9,635,000. And so that's going to take this graph up a little bit higher. We're adding about 20,000 cows a month. That says in the next 6 or 7 months, we could be at 9.7 million cows if we keep on this trend. Now, another argument that I've made recently is we had a run-up in cow numbers in 2018. We had another run-up in 2021. But I think this run-up is entirely different. And the reason it's different, these two previous run-ups were people stuffing more cows in their barn. This one is clearly an expansion of facilities. Particularly here in New York, we have numerous new 3,000 cow dairies going up. And so I think that this run-up in cow numbers is completely different than we had previously. All right, let's turn to your milk check. The March check should have been close to $20. It was up about $1.32 with all the components put into it. However, this time of year, fat and protein percentages actually come down just a little bit. If we go back to 3.5%, that statistical uniform price was $17.74. So you've got $1.20 of components added on to that from the statistical uniform price. Across the nation, the highest is always down here in the southeast, and it turned out to be Florida at $21.55. And Minnesota, Wisconsin kind of lives and dies on class 3. They're at $16.66. Your $17.74 was very similar to the Midwest at $17.65 and Texas at $17.68. Plotting out your statistical uniform prices would suggest that you're kind of the high end of what I would call the lower tier. So similar to what we had in 2019, way off of what we had in 2022, early 2023, when you had that run up to 26, and also here in 2024, 2025. Remember, in December, we changed the formula for Class 1 prices that actually brought this up a little bit with those new changes. Class 1 came up from last month by 77 cents. Your number printed adds $3.80 to that, so we're at $19.27. So normally the top line on the milk check is the fat. Overall, the pounds came down. Again, this time of the year, percent fat drops a little bit, but prices for fat and protein both came up. So I plotted these as of settlements as of last night. Fat price was 202 in March. Now that's going to trail off a little bit here to $1.80 and change. There was a thinking that butter would be really in short supply, and that hasn't turned out to be so. Our low was back here in January at $1.45, and of course the high back in July at $2.84. Overall, you came up about 3 ticks in fat for the year, but it did drop month over month. And this 4.39 is reasonably strong. The highest is the Pacific Northwest at 455. And I've been trying to predict some of these numbers month over month here. And so I'm going to predict that fat and the agricultural prices comes in about 4.42%. That's down just a little bit from what the federal milk marketing data shows. But this is a graph of what I've been able to predict over time. And it's pretty strong. So I'm going to go with that 4.42, which means that we're going to likely be up 4% year over year. Protein came down to 340 off that 344. Of course, price went up. We're at 209, came up 15 cents. Our low was back here in last July, $1.87. These look like they're headed up quite a bit, but I am continuing to put a question mark on how high these protein prices are going to rise. Now for you, you came up 6 ticks, as I said, from last year, but it did come down this month. And your 340 was similar to the Midwest, at also 340. The highest is the Northwest at 353, and the Northeast is always the lowest at 335. So I want to talk about cheese for just a minute. We've kind of gone in the last year from a high of $1.93 down to $1.40, and it's been quite the roller coaster ride. And the question is, where are we now? And I think we're kind of in this $1.60 plus or minus a little bit channel. This is where we've been for the last week. There was one company that was pushing up on the market here at the same time here. But now that everything's kind of settled out, this $1.58 to $1.60 seems to be the price. But the carry in the market is very, very strong. August is $1.79. And this is a graph of the carry in the market. And I want you to think about this for just a minute. This is $1.80 kind of cheese. And the question is, if we're at $1.80, do we think we're going to continue exporting cheese in the world market? So let's look at the last global dairy trade. It was down. I expect this next one will probably come under a little bit of pressure. That's tomorrow because the Strait of Hormuz is still closed, and a lot of exports actually go through there. But cheddar was 216 on the global market, and butter was 275. So the first blush on this would say, hey, we should be exporting just a tremendous amount of cheddar. And this is a graph of the global dairy trade, which is in green, export price, which is in red, and then our National Dairy Sales Report price in blue. And so historically, I've been saying, well, anytime we have these black dots, we should be exporting a bunch of data. But what we've found recently is the export price is unrelated to global dairy trade. And it's the export price that is more important than global dairy trade. Partly, I think what the GDT does is it looks 6 or 7 months out, where the exports is what actually got exported this month. So latest data was for February. The export data for cheddar was $1.87. And so again, if you take 30 cents off of that to get it offshore, that says we're going to have $1.57. And that's why I continue to come back to $1.57, $1.60 kind of cheese numbers. We export 6.9% of the cheddar that we produce. Now, total cheese, because a lot of this is Italian, is $1.99. It's a bit higher, and we did export 11% of total cheese production. Now, February was particularly a strong export month, I think partly because the U.S. dollar was very weak. but the dollar has really strengthened, so it's going to be interesting to see how these numbers come out for March. And butter was 230. Other solids came down in price. The concentration almost never changes. Came down to 42 cents, down 2 cents. The high was back here in about January. This is all based on whey, and so the trade thinks that whey is going to get a little bit stronger. It really seems to be hitting resistance at 70 cents on the spot market. Every time it hits it, it comes back off of it. So again, I'm going to put a little bit of a question mark on this. So those three together, fat, protein, and other solids, make up class 3. That came up $1.22 to $16.16. Our low was in January, which we thought would be at $14.59. But what a wild ride this particular contract was. If we go 6 months out, we fell 94 cents, but we had a low of 1503. We had a high of 1758 to settle in here at 1616. So again, just an absolute wild ride on the March contract, and I think April is going to be just as wild. PPD is basically everything other than class 3, so it's going to be class 1, class 2, and class 4. That came up 8 cents to $1.58. So where are we going here in the future? So this is as of kind of the settlements this afternoon. Protein price is higher than the fat price all the way through here. And protein is looking like it could hit 270, 275, 280, somewhere in here. And fat is going to come above $2 mark at the end of the year. But again, there's a lot of optimism in the market right now that I think is going to be interesting to see if we can actually fulfill it. And then the way that things look this afternoon, class 4 is clearly higher than class 3. So that means we're going to have high PPDs and reasonably high milk price, even though class 3 is going to be fairly low. One slide on grains here. This is the data as of Friday. It was an up week on corn, down week on soybean meal. Soybean meal is under a lot of pressure, I think, because soybean oil is so valuable right now that they're crushing for the oil, and that's going to put pressure on the meal. So I put in the corn channel resistance around 165, and we're just right at the top of that right now. Really, until we know what the planting intentions are and what the weather in Brazil is going to be, this is just going to be a wait and see kind of game. But again, overall, I think bean meal is going to be a little bit under pressure. Cattle's under pressure. Live cattle came down to 241 and feeder cattle at 360. But on the Oklahoma National Stockyard, the 5-weight cattle are still pushing $5. So I'm not so sure that the cattle is done with their story. And the cattle on feed report was fairly bullish on Friday. And just finish up with weather. Looks like it's going to be, warm and a little bit wet in the order 33 area. And what's nice is the fact we've cleaned up a lot of this drought monitor in order 33. There's a little bit of abnormally dry in northern Indiana and southeastern Illinois, but overall it looks pretty good for you guys going into spring. All right, Ben, that's what I had for this month, and back to you.
Thank you, Larry. Novus AgriScience hopes you found this information insightful and look forward to next month's installment.